Welcome to the Trading Journal. In this video, I will show you how to use one of the most used indicators, which is called the Bollinger Bands indicator. First, I will explain it, and then I will show you some strategies you can try with Bollinger Bands. Also, I will show you the biggest mistake people often make while trading with Bollinger Bands. Please don't forget to subscribe for more trading and investing videos. Bollinger Bands are created by a trader/investor John Bollinger in the 1980s, and since that day they are one of the most used indicators. Now let's take a quick look at the Bollinger Bands. Bollinger Bands have three components. The first one is the red line in the middle, and it is the 20-period simple moving average. From our previous videos, you may remember that the slope of the moving average shows us the trend's direction. You can find the video about the moving averages below in the description box. So, it is the first feature of the Bollinger Bands. Thanks to the moving average between them, they indicate the trend. But 20-period simple moving average by itself is not enough to understand the trend. You should watch the video I told you about in order to understand how to use moving averages to identify the trend. And two other components are the lower and the upper bands. They are simply two standard deviations away from the moving average. You might wonder, what do standard deviations have anything to do with it? But they are really important, because they indicate volatility. They indicate if the market is overstretched or not. Before diving into other parts, I want to show you how you can find the Bollinger Bands in your charting software. Here I am looking at 15 minutes euro to dollar chart on tradingview.com. It is a free website with all of the features you need to trade. To add Bollinger Bands, you have to click here on the top menu. It says Indicators and Strategies, and in the opening window we will search for the Bollinger Bands. You can add them to your favorites since we will use them quite often. So we click on the Bollinger Bands and now we have them on the screen. If you want to change how they look or their settings, you can click the settings icon here. These are the default settings of the Bollinger Bands indicator. You can change the standard deviation if you want. If you increase it to 3 for example, you will see that more of the bars will be inside the bands. But I use it with default settings, which are the 20-period moving average and 2 for standard deviation. On average, 95% of the bars are inside the range. They are inside the bands. So 19 out of 20 bars are inside the Bollinger Bands. Let's think that for a second. Since nearly all of the bars are inside the bands, and since the Bollinger Bands are used by many traders, these bands can act as support or resistance. It is the second use of the Bollinger Bands. Since many traders look at this indicator, these two bands can act as a psychological barrier, and we call these kind of barriers as support and resistance. If the price is outside of the bands, it means that the price is not at the standard level, so it is either overbought or oversold. You can see here, the price reaches the upper band, it means that it is overbought, and it can bounce from that point. But I know what some of you guys think. You think that if you go long at oversold levels and sell at overbought levels, you will make a profit. But trust me, if you follow that strategy, you will lose money, because you should never trade Bollinger Bands alone by themselves. Instead, you should combine them with candlestick patterns and other indicators. It is the most common mistake new traders make while trading with Bollinger Bands. They buy anytime when the price touches the lower band, and they sell anytime when the price touches the upper band. This strategy might work when the price is moving inside a range, but if you follow this strategy, you are most likely to lose money in the long run. This strategy will lose you money because it only works if the price moves in a range. However, if there's a trend, the price will probably not touch the opposite band. Let's look at this example. It is a daily chart of Apple, and even a new trader can identify the strong trend. If your strategy is to go long whenever the price is oversold and to go short whenever the price is overbought, you will need to open 5 short trades in a row in this example. And as you can see, you will lose all of your trades. Because you break the first rule of trading, you are trying to trade against the trend, and you will be most likely to lose if you do so, just like you did in this example. So always look for the trend before opening a trade, and try to open a position in the same direction as the trend. This example also shows us another important thing. It shows that if there is a positive trend, price tends to stay higher than the 20-period moving average. So if there is a trend, the moving average can act as a support. Now you know the three main features of the Bollinger Bands. Actually, the first feature is about the moving average, but still, these three features are the basic features of the Bollinger Bands indicator. As I said, I don't recommend it to identify the trend, but still we will use them to identify the overbought and oversold conditions, and we will definitely check them to see if they act as support or resistance. Okay, I just showed you the most common mistake that traders do. Now we can move to the strategies you can try with the Bollinger Bands. Our first strategy is a trend trading strategy. Remember I told you that if there's a trend, the red line in Bollinger Bands, which is the moving average, can act as a support. Here in this example, you can see the upward trends, and moving average acts as a support many times. So if you want to open a position in positive trends, pullbacks are the best time to open a trade. Since the red line acts as a support, you can open trades when the price is near the moving average. The second strategy is one of my favorites. You can use this one to find breakouts in the price. And since the price changes dramatically, the risk-reward ratio is way higher. In this example here, you can see that bands are getting tighter and tighter. It means that there is a low volatility for a long time. It looks like the bands are getting squeezed. And after that, what happens? After the low volatility, the breakout starts. So these tight bands can give you a warning of a huge breakout. So after the price starts to push the bands, you can open a trade with a risk-reward ratio of at least 3-1. But don't forget to put a stop loss to your order. So our second strategy is a breakout strategy. If the bands are getting tighter, you should be careful and you should start to look for breakout signs. The third strategy is the one I warned you about. I told you to be careful about it because it only works when the price moves in a range. What do I mean by range? It means that price moves in a lateral direction. It does not make higher highs or lower lows. It is under consolidation. Most of the new traders make the mistake of rushing while trading with this strategy. They buy immediately when the price is outside of the bands and do the same while selling. Instead of doing it, you should stay calm and open trades only when the price is entering inside the bands again. For example, if you look at this entry, we should not enter at this candle nor this candle. We should wait this candle, since it enters the band. The other band should be your take profit target. What does it mean? It means that if you go long when the price is at the lower band, your take profit point should be the upper band. And if you go short at the upper band, your take profit point should be near the lower band. You can use these three strategies with Bollinger Bands, but keep in mind that Bollinger Bands simply give us information about the price. They do not give trade signals by themselves. They tell us if the price is relatively high or low. Even John Bollinger himself told that bands do not give entry signals, but they answer a question about the price. So if you go out and take any trade when the price touches the bands, you will be trading against not only logic, but also the creator of this indicator. Have a fantastic day everyone, and if you have any questions in mind, hit me up in the comment section. Please comment me any trading video you want me to create. Also don't forget to hit the like button and you may subscribe to the channel if you like. Thank you for watching.